Good morning from Prudent Prosperity, Tuesday, June the 2nd. Here are 5 things you need to know today. Number 1, U.S. stock futures slipped on Tuesday as an OECD warning of economic damage from President Trump's tariffs has put investors on watch for progress in U.S. trade talks. Futures on the S&P 500 and the Dow Jones Industrial Average both fell about 0.2%. Contracts on the tech-heavy NASDAQ 100 futures are down about 0.1% on the heels of an upbeat start to the week for the major gauges. Number 2, the Organization for Economic Cooperation and Development, OECD, has slashed its outlook for global economic growth, citing the impact of Trump's trade policy on investment and confidence. The U.S. economy will slow particularly sharply, the OECD forecast, going from 2.8% growth last year to only 1.6% this year and 1.5% in 2026. In another sign of trade war taking a toll, China's manufacturers suffered their worst slump since 2022 in May. Tariff hikes had an impact on smaller exporters despite the U.S.-China trade truce. Caixin found. Number 3. Palantir Technologies hit a record high for the second straight session Monday as investor optimism over the AI-powered analytics software provider continued to drive the company's share price higher. Palantir shares rose 0.2% to close Monday at $132.04 after surging nearly 8% Friday. The stock has doubled since hitting its early April low and is up 75% since the start of the year. The surge comes as the federal government has integrated a Palantir product called Foundry into at least 4 agencies, the New York Times reported Friday. Palantir shares are ticking higher in pre-market trading. Number 4, shares of Big 3 automakers are in focus after dropping Monday on investors' concerns over proposed higher U.S. tariffs on steel imports. General Motors and Ford Motor declined roughly 4% and Stellantis dropped 3.6% yesterday after President Donald Trump said that the U.S. would double its tariffs on steel imports to 50%, which could greatly increase costs for automobile manufacturing. Shares for all 3 are edging lower in pre-market trading. Number 5, Dollar General on Tuesday raised its annual sales forecast after its quarterly results topped estimates, as still high inflation and tariffs-led economic uncertainty drove consumers to its stores for affordable everyday essentials. The company's shares jumped 8% in pre-market trading. They have risen about 28% so far this year. And that's it for today.
If any of today's insights sparked a question or made you think about your own financial journey, don't hesitate to reach out to us. Let's take your next step together, strategically and confidently. And always remember, stay prudent, stay prosperous, make it a great day.